Hello, it's Lawrence Alexander with the Jefferies Chemicals team. It's my pleasure to introduce Raviv Zofer, who's the president and CEO of ICL Group. Raviv, thank you very much for joining us today.
Thanks for having me, Lawrence.
Maybe because ICL is going through such a remarkable transformation, let's start there. If you think back of the envelope, it looks like ICL could probably swing around $6 billion of M&A over the next 5 years and still have a solid balance sheet. How do you think about the target for ICL's business mix in the middle of the decade? And how are you thinking about capital allocation decisions?
Okay, so first of all, we're very pleased with our balance sheet position. It allows us immense amounts of flexibility. And the plan for the next 5 years involves about $1 billion of M&A, out of which half has already been done. Specifically, we're targeting 2 industries. We're targeting agriculture and food. In agriculture, we've made a couple of acquisitions in Brazil. In January, we announced our Fertilaqua acquisition. In specialty fertilizers, and just recently on July 1st we closed a much larger deal, the Compass Minerals plant nutrition business, which is $250 million and almost $50 million of EBITDA last year. And those companies are very high growth companies, profitable companies with EBITDA that's at a margin that's higher than our existing specialty fertilizer business. So we're looking for accretive acquisitions. And the strategic rationale for acquiring is that we're turning our plant nutrition business, our specialty fertilizer business, into a leading global business. And in order to do that, we're targeting Brazil and China, the 2 largest growth markets that provide for about 70% of global growth. And with those 2 acquisitions, and hopefully with some additional smaller acquisitions in the future, we're well on our way to achieve our goal on the plant nutrition business, which means that we have the ingredients that are necessary from organic and non-organic growth to achieve our targets. All in all, getting back to your original question, the $1 billion is intended to enhance that business and allow it to get to leadership position, and we're well on our way to that. The additional funding is dedicated to our food business. We're diversifying our phosphate solutions business into alternative proteins and leveraging on our expertise in textures and fermentation for food in order to capitalize on some of the tremendous opportunities that exist in the food industry. And we expect that we will need about $500 million of additional acquisitions for that need. We're also expending capital on production capabilities, and that's well underway as well. So we could be opportunistic and increase our M&A spending above $1 billion, but the original plan is for $1 billion until 2025. As you mentioned, we have a very strong balance sheet and can do a lot more to support our overall targets of growing revenues by about $2 billion. About $500 million is supposed to come from external growth and the M&A I just described. Another $1.5 billion is coming from organic growth, and the organic growth needs capital investments and needs some other types of R&D spending and spending on future capabilities that will also require capital. And given that we have pretty high confidence that we're going to achieve the plan that we structured 2 years ago and that was presented in our investors summit on September of last year, we could consider making some changes in our capital allocations, including increase of our dividend, or repurchase of our equity. But first, we will make sure that we have achieved the targets that we set out to achieve. So $6 billion, yes, a very comfortable balance sheet. We're very, very cash generative, and we manage the company with significant focus on cash generation. About 50% of the M&A we expected in the plan has already been achieved. Some additional M&A hopefully will be upcoming. And capital allocation for the next year and a half or two is with no change in terms of dividends and other plans, including CapEx. And going forward, if we achieve everything earlier than we expected, which is the way it's looking right now, then we can consider other ideas for capital allocation.
And there's been such a large wave of innovation in the agriculture space, in genetics, plant health, tailored crops, weather prediction, precision planting software. Where do you see the opportunities to build a sustainable competitive advantage? And it sounds as if your M&A is more tilted towards profitable assets that are already established. And what is the risk entailed with that approach?
Okay, so it's a very good question. In terms of our M&A was focused on creating some additional capabilities with biostimulants and also creating a stronger distribution system, namely in Brazil. At the same time, we're also investing in new solutions that will be leveraged globally, including in Brazil. And so we're very much involved with creating some solutions for the new needs of sustainability. So we're developing our polyhalite line in the UK, which provides organic fertilizer that we believe will be very much in demand. We're expanding our capabilities in biostimulants, not just through M&A, but also we're investing in capabilities that use computer-based approaches in order to, or what now is called artificial intelligence, in order to create new solutions for biostimulants and for soil nutrients, and also to deal with a big sustainability issue around nitrogen fixation. I believe very much in database solutions, and so we're investing in database solutions. And just recently, in our newly launched external accelerator, which we call ICL Planet Hub, we just made an investment in an AI-based startup that deals with creating solutions for new alternative protein sources and uses. And so that takes us from agriculture to food. And so we're looking at biostimulants, AI-based solutions for biostimulants, for increased, for better use of nitrogen and better use of nutrients for plants. And we're also looking at expanding our organic fertilizer offering. We're also investing in creating solutions, as I mentioned, for specific sustainability issues. For example, we're global leaders in controlled release fertilizers, and we are working intensely in order to create the first biologically feasible CRF for future use that will comply with new European regulation coming into force in 2026. So we're developing biodegradable solutions for controlled release fertilizers, which are efficient fertilizers that need to meet new sustainability requirements, and it's very much a focus of ours. So extending our leadership position in CRFs requires new innovation, new biodegradable innovation, Biostimulants is a whole new world. We're also developing biological solutions. We're not in genetics. Genetics is an expertise. We're not developing that expertise. But other than genetics, I think everything else you mentioned, we're interested in.
And I guess then that dovetails with, I guess one theme this conference is the carbon net zero initiatives in Europe and globally. And how is ICL positioned, and where will that benefit you, or where can you increase wallet share by providing solutions?
Okay, so just last week in our investor call for our Q2 financial statements, we stated that we're on a mission. We're on a mission to transform our company from a company that extracts minerals to a company that uses those minerals in order to solve sustainability issues for humanity. And we're very much involved with net zero, even before we made a decision on net zero in 2050. We, as the main way to get to net zero involves energy. We've transformed all of our European electricity requirements to renewables. We've transformed our Israeli operations, which have the highest carbon footprint within our organization, to natural gas, which has a lower GHG footprint than do fuel sources. And we have a very aggressive plan to move into renewable energy. We just closed on a project to convert one of our sites in Israel to PV. And we have a very ambitious plan to convert our Sdom site that accounts for 50% of our GHG emissions to 100% renewable. It's a long-term project that involves PV and green hydrogen based on electricity capabilities that we currently already have. And it's an ambitious project. At the same time, as I mentioned, we're promoting agricultural solutions like organic fertilizers, like biodegradable fertilizers, like biostimulants and other solutions that increase the efficiency of the use of fertilizers. And we feel that collectively, among those and other efforts, such as closing of one of our two mines in Spain, we're actually consolidating two mines into one, and building a ramp that replaces 500 trucks moving around roads every day. Those types of initiatives are the reason that we've been very successful in meeting our targets in the past 3 years. And as anybody that's interested can see in our corporate sustainability report that we just published, we're well on track in terms of our GHG, KPIs. All in all, other than net zero, we have a target of 30% reduction in greenhouse gas emissions by 2030, 50% renewable energy by 2040, 3% per year reduction in use of water, and increase of circular economy solutions that we have. And of course, we have very aggressive diversity targets that we've also been able to meet in recent years. We're very highly ranked on ESG issues in the fertilizer industry and also in the chemical industry. And we're very proud to recently receive head of the committee of IFA. IFA is the International Fertilizer Association, and I'm currently the head of the Sustainability Committee. I'm very proud of that. We have a whole procedure in ICL now that any new product that we develop has to go through a methodology with a specific filter that does not allow us to develop any product that doesn't have minimal sustainability requirements. So we've made that part of our DNA, and the technological transformation that we're going through is much more powerful because of the value attached to it, and our customers are already enjoying the benefits of getting more sustainable products, and we're very proud of that.
And I guess a question about how to interpret the short-term results. You've started this year very well. When we look at the longer-term targets you set out, do you think about it in terms of there's a CAGR, and if you over-earn in 1 year, you're still targeting that CAGR, or do you raise the bar for your employees every time you have a good year so that they have to hit that CAGR off a higher base?
Yeah, it's a good question. The way we look at our business is that it's part commodity and part specialty, and it's actually a very important part of our strategy to increase the specialty part on account of the commodity part, notwithstanding that we're not trying to take down our commodity business. We're trying to become more efficient on our commodity business. We're price takers in our commodity businesses in potash and phosphate. And so we target lower cost per ton, and that is the target for our employees. We know that we are going to be competitive in any kind of market conditions, but we want to be as competitive and as profitable as possible. So we've added some capacity in our potash business, and we're increasing efficiencies in all of our commodity businesses, and that's the strategy for commodity. For specialties, the strategies around technological innovation and new product introduction, and we've been very successful in the past couple of years in increasing our specialty business. 53% from our EBITDA currently comes from specialty. So the main driver of our results is the specialty business. But the way we look at our business is we're a specialty business with commodity upside. So in good times, we have even better results than we expect. Our baseline for our results is 2018. So the way we look at long-term planning is that we look at anything that's above or below 2018 commodity prices is something like noise that can be short-term and can be long-term. But we're basing the strength of our business and the vitality of our business on our specialties and our innovation and ability to create new products, new solutions for mankind.
And then just the last one, because you alluded to this in the beginning, is most people I speak with don't think of ICL as having fermentation skill sets. And so just in the couple of minutes we have left, can you just sort of sketch high level what you have and what you can develop there?
Okay, so ICL has built significant expertise through a phosphate solutions business, which has two legs to it. It has a food business and an industrial part of the business. All in all, in phosphate specialties, we have about 25% market share, and we are the leaders in that business. As part of our strategy, we're also diversifying from that business. And that's how we got into the alternative protein business. Our capabilities and textures, fermentation, and other capabilities have been achieved through long-term partnerships with most of the largest 20 food companies in the world that we work together with them and create solutions. And we try to be a leader at what we do. And our food labs, we have 20 R&D centers in ICL, including 5 food R&D centers in 4 different continents. And in those labs, we've developed several types of expertise. Working with our customers, we don't work B2C, only B2B. And that's where our expertise was established. And of course, as I mentioned, we're also diversifying away from phosphates in order to give ourselves growth opportunities, and specifically the most significant The most significant side road from phosphate has been alternative proteins, where we've developed 4 different types of technology. The most significant one is actually a fiber technology, and we're currently building our first significant alternative protein based factory in St. Louis, which is focused very much on fiber. And we expect those technologies to be very significant. We have a very, very robust pipeline, and are only limited at this point by our capacity to produce what our customers already want.
Okay, and I think they're about to give us the hook, so that's very tempting to ask further about that, but we'll have to follow up. Thank you very much for the discussion today, and good to see you.
Thank you, Lawrence. Appreciate it. Take care.
Sure.